Hello traders. Today we are going to analyze SPY chart on a 5-minute time frame for 8th August 2025. Now, as per our strategy, red color moving average is 200-day simple moving average. Blue color line is a 20 period moving average. Now, on 8th of on 8th August, the market opens here. Market opens here quite above both the moving averages. So we are basically bullish. We are bullish for the market, and market it will stay as long as market is above both 20 and 200 simple moving average. Okay. So now let us analyze candle by candle. On the first candle, if you see this first candle, this is not a very bullish candle. It is indecisive candle. So we can hold, and we don't have to take a position on conservative basis. Second candle is a bullish candle, but it has not crossed or broke the high of the first candle. So high of the day has not been broken on the second candle. This is first candle, second candle. But on the third candle, third 5-minute candle, it breaks the high of the day. And market is showing basically sign of going up. So as soon as the market breaks the high, we enter at the close of the third candle. You can enter here. Sorry, you can enter here. We basically buy the market here, and our stop loss is low of the third candle. Low of the third candle. Now, once we take the position, where do we exit? See, moving average is quite far from the market. So this being our stop loss is not relevant. We will basically be looking for monitoring the any bearish sentiment in the price action. So if you see this candle, this is the first red candle. It is a strong bearish candle. So on conservative basis, we enter here and exit on the close of this red candle. With this, once we do this, if you count the risk reward ratio, we are around 2.73 R on this first trade. Now we will analyze our next trades. After closing this trade on this candle, after closing our first trade on this candle, we are waiting for a good entry signal. See, we are basically trying to enter the market as close to 20 period moving average as possible. Now, after this exit, the market has been going into sideways market. Okay, so we don't do any trades. This is the closest it has come in this red candle. Market has come close to it, but it is a bearish candle, so we don't enter on the red candles. we don't enter a buy position on red candles. If you see this green candle, this is a bullish candle. It has touched the 20-day moving average and it has crossed the high of the previous candle. That's why we can take a buy position here, enter buy, and with a stop loss being low of the green candle. Now after this market goes in, hits our stop loss. We have got a stop loss here on this candle. Now if you see, market is trapped between the 20 period and 200-day moving average. Once it starts coming out of this on this candle, we can start again buying. So we buy here, a third trade being here, we buy here, and if you see this candle here, we don't exit because there is small wick on the lower side and the candle is not strong. So we continue holding our buy position from this candle. Buy here and it keeps going. But again, there is a second red candle in a row, which is a negative sign. Market may start turning bearish. So we basically, on a conservative basis, we exit on this candle. What is the risk reward with this trade? It is around 1.3 R. So this is our risk unit is 1 R and our reward is till this candle 1.3 R. So third trade similarly is a profitable trade. We can smile. At least we made 1.3. Whatever in second trade we lost 1 R, we recovered back with little bit of profit. So we kind of break even in the second and third trade. Now next trade, fourth trade, similarly the market is near the 20-day moving average and it has crossed the high of the previous candle, and market is basically sustaining above the 20 moving average. So we take a trade here with a stop loss. Within 2 candles itself, we hit our stop loss, and so our fourth trade goes in a loss with a -1 risk reward ratio. So again we lose this case, this trade. Now we will go to the fifth trade. Fifth trade, as you can see, similar setup. Market is near 20-day moving average. Market is near 20-day moving average. Market has crossed the high of the previous candle. This market has crossed the high of this previous candle, and it is a bullish candle. So we buy it on the close of this candle. We buy here, and we basically put our stop below the low of this candle, trigger candle. If you see, calculate the risk reward ratio for this trade. This is trade number 5, and our risk reward in this case is again 1.3. Sorry, my pen is not working properly. Okay, my risk reward is 1.3. Now going the last trade, sixth trade, we had a similar setup. Market is near the 20-day moving average and it has crossed the previous red candle's high in this candle. We entered here and we lose -1 R. -1 risk unit we already lost. So again we have a loss making trade and we close the day on the end of this candle. So this is a complete background of 6 trades what we took on 8th August 2025, and if we analyze the overall profitability for our trades, it comes to basically okay. So now let us analyze how much is a day's profit and loss as per the 6 trades we have taken. So first trade we earned around 2.73, second trade was -1, third trade was 1.3, fourth trade was -1, fifth trade was 1.3, and sixth trade was -1. So we have to negative trades are totaling 3 -3, and positive trades will be this 2 is 2.6 and 2.73 is the first trade. So it is around 5.33 minus loss making trade is 3, so it is around 2.33. if you check this with our website on our tracker, if you see this page, it is 2.33. We have 2.7 -1 minus 3 negative trades and 2 positive trades, 3 positive trades. So net is 2.3 is what we earned on 8th August. You can see the date has been updated here. This is our date, 8th August. But with this, our overall cumulative profit and loss risk reward ratio, what we have earned is around 20.33 as on 20th 2025 August 8. So thanks a lot, and do like and share this video on YouTube.